All right, today we're jumping into a really interesting one from the microcap space. It's SenesTech, ticker SNES. Now, these guys just dropped what, on the surface, looked like an absolutely killer second quarter. I mean, records all over the place. But the market? Yeah, the market had a completely different idea. So let's get into what I'm calling the results reaction paradox.
And this is the million-dollar question, isn't it? This is the whole puzzle we need to solve today. The company posts its best quarter ever. Management is on the call sounding super confident, and the next day, boom, the stock gets absolutely crushed, down almost 13%. So what on earth did the market see that wasn't in the headlines? That's what we're going to figure out.
First up, let's talk about the good stuff, because there was a lot of it. They hit a record quarterly revenue of $625,000. Now, I know that might not sound like a huge number, but for a company this size, that is a massive milestone. It's a really clear sign that growth is starting to kick into a higher gear.
And that growth is for real. We're talking a 36% jump in revenue from the same time last year. You know, this isn't some tiny beat. This is a strong, double-digit acceleration on the top line. That is exactly the kind of thing that gets growth investors to sit up and pay attention.
But honestly, this might be the most impressive number of them all. A record gross profit margin of 65.4%. That is a monster improvement of over 1,000 basis points year over year. I mean, wow. Margin expansion like that is huge. It tells you the whole business is just getting fundamentally healthier and more profitable with every single sale they make.
And here it is, the paradox in a nutshell. Record revenue, fantastic growth, margins going through the roof, and the stock price just tanks. It goes from $539 to $469 in one day on pretty heavy volume. So what is going on? Well, to really get why the market is so skeptical, you have to first understand management's super bullish story.
Management is telling a very clear story. They believe they have a game changer on their hands, a product that's totally transforming the company. So let's take a look at what they're so pumped about.
So this is straight from the CEO, Joel Fruit, on the earnings call. Right now, everything, and I mean everything, at SenesTech revolves around their product called Evolve. They see it as the key that unlocks a way, way bigger market than they've ever been able to reach before.
And here's why it's so important. Look at this. Evolve is now a whopping 83% of their total revenue. This thing isn't a side hustle. It IS the business. And because Evolve has much, much better margins, this huge shift in what they're selling is the reason we saw that massive jump in gross profit. It's simple. The more Evolve they sell, the more money the company makes per sale.
So how are they going to sell all this Evolve? Well, they've laid out a pretty clear 6-channel strategy. E-commerce is already killing it. That's more than half their sales. They're getting into big cities like New York and Chicago with pilot programs. They just inked a deal with a distributor, Bradley Caldwell, to get into thousands of farm and hardware stores. Plus, they've got international approvals and big ag trials in the works. On paper, it looks like a really solid, diverse game plan.
Okay, but you and I know a good story will only get you so far, right? For investors, it always comes down to the dollars and cents. What's the actual path to making money look like? Let's dig into the financials.
Okay, so this slide is really where the rubber meets the road. They're at $625,000 a quarter right now, but they need to get to about $1.5 million to break even on cash flow. That's a pretty big gap. And they're still burning through about $1.4 million a quarter. But, and this is a really, really big but, they have a ton of cash. Management says the runway will last them through 2027 and maybe even beyond. That means they have the time and the money to close that revenue gap without having to go back to the market for more cash, which takes a huge amount of risk off the table.
So we've got the bull case from management, and we've got the hard financial numbers. Let's put it all together now and try to decode why the market had such a negative reaction even with all those big wins.
It all boils down to this split right here. Management is talking about all the great operational stuff. Evolve is taking off, their channels are growing, margins are fantastic, and the balance sheet is rock solid. But the market is looking past all that and focusing on the risks. The company didn't give any formal guidance, which makes investors nervous. And let's be honest, it's a microcap stock, so it's going to be volatile and hard to trade. The big, lingering question is all about execution. Can they actually more than double sales from here to get to break even? That's the billion-dollar question.
So, knowing all that, what's our take? What's the call here? And more importantly, what should we be looking for when they report next quarter?
Okay, here's our call. We're initiating on SenesTech with a market perform rating and a cautious near-term outlook. Look, the story is great and the balance sheet is de-risked, but the market needs to see the proof.
The things that could really move the needle, the catalysts to watch, are concrete wins. We're talking a full-scale contract from a city like New York, getting listed in a national big-box retailer, or getting those approvals for Australia and New Zealand. Any one of those would be a game changer.
And that leads us to our final thought. How could you actually trade this? Well, SenesTech is the absolute definition of a show-me story. The potential is definitely there, but now management has to go out and prove they can actually deliver.
So here's a plausible trade idea. The whole thesis is that the big price drop has already priced in a lot of that execution risk. So the play could be to slowly accumulate shares on any weakness, maybe using that post-earnings low around 470 as your guide. You're waiting for specific catalyst, a national retail deal, think Tractor Supply or Home Depot, or a full-blown municipal contract. If they land one of those big fish, it proves the whole break-even story is real, and you could see the stock re-rate back to its old highs very quickly. The risk, of course, is that those catalysts take too long to happen, and the stock just kind of drifts down, even with all that cash in the bank.
And one last, very important thing to remember. This is for informational purposes only. It is not financial advice.